Hello everyone, Miss B here. I hope we are doing well and working on our pieces to our puzzle. Today I wanted to talk to you all about bank accounts and why your children need their own bank accounts. And I would say checking and savings accounts. First off, for savings, it's my personal recommendation that as soon as if you buy into the Social Security number and United States Corporation concept or fact, if you will, then as soon as your child receives the Social Security number, I would offer go ahead and open their account. I did mine, and that's usually my gift to all of my nieces and nephews as they were born, funds to start their bank account. If you, for example, if you opened a savings account, your child is, a month old or 3 months old, and you started with $25. There's no minimum balance requirement for children. There's no monthly fees or anything like that. Plus, they get interest. It's not a lot of interest, but it's interest. And you know what? 10 cents is better than 0 cents. And it continues to add up over time. But I started them with $25. And for example, if you start with $25 and you put $25 each month and you continue to roll that over, the interest that's compounded onto that, at the end of 18 years, your child would have about $7,200 in the bank, roughly, give or take. Now, of course, that's not assuming adjustments for inflation or interest rate changes up and down. That's just a flat 3% over the 18 years. Just to do some rough, quick numbers. But one of the keys with savings is it should be consistent. And how do you do that? How do you make it consistent? Well, you have it automatic transfer or direct deposit, because some employers will allow you to split your payroll check, so you can direct deposit all but $50 into your checking account and $50 into your kid's savings account, or however you want to break that up. I personally I was able to do multiple deposits into several accounts, and so I had funds coming out for my savings, for each of the kids' savings, our IRAs, another investment account I had, and then what was left came into my checking. And what it taught me, well, not me, what it taught them was that they had to put money away when things came up that they wanted to do that wasn't part of the norm, and it was going to come out of their money. I would let them know, this is how much you have as the statements came in, and if you want to do this activity, then it's going to have to come from your funds. So they would see the money coming out. We would do the calculations to make sure everything is correct, and they knew, well, if I had $1,000 last month, but I wanted to do this event, and now I see my account that only has $800, they weren't liking that too tough. They liked to stay above the 1,000. So they quickly learned not to pull out of savings so much. And as they grew older and were able to work little odd jobs here and there, babysit, they had graduation and they got money for their gifts, or I had some people would actually pay them for every A they got. And my kids, they made it up to National Honor Society, so they kept a lot of A's rolling. And one of the rules was every dime that you earn, whether it's through your academics, whether it's through babysitting, whether it's braiding hair, whatever it is you're doing, a portion of it must go into your savings account. And that was just the standard. And I think the first time or two, they looked at me like I was kind of crazy. But then when I pulled out their savings records and showed them and said, this is where we are, and if you continue to do this, this is where you'll be, their eyes got big and they were like, oh yeah, okay, we want to do that. So once they understand the potential, then they tend to be on board with it. But the importance, one important reason for it is to learn banking, to learn how to bank. I was, I think, 18, 19 before I opened my first account, and I had to learn how to be a responsible account holder. So that first account I wasn't exactly responsible. But the second account, I learned, proper fiscal responsibility is what I learned. And I think kids need to learn that much sooner than the age of 18, when they've left home and they had no clue of how to handle banking. All they did was cash and money orders. So they also learn how to balance, their accounts. More so at the checking level, which I'll get into in just a minute. But the interest, at the younger ages, they don't really know how to compound the interest, but they know they're collecting interest. As they get older, more at the high school level, late middle school into high school, they can learn how to compound simple interest. But they definitely can learn how to track spending. Banks are really good about giving reports these days. So if they're pulling funds out, you can make a notation in the bank, in the actual transaction sometimes, what the money is coming out for. One thing we did was we used to transfer the money over to my checking account where there was a debit card off of it. And so when we did the transfer, if it was $10 or $100, whatever it was, I would put what the money is being transferred for, so they could see a running log of where their spending is where they're spending the bulk of their money and stuff like that. And then they're learning how to read statements. That's going to be important. Not just bank statements, but they're going to need to learn how to read their water bill, their light bill, and all those other things before it's over with. So learning how to read statements, banking is a good introduction to learning how to read all those other statements. And then as far as a checking account goes, a lot of the same stuff with savings, but it teaches them how to write actual check instruments. More activity goes in and out of a checking account, so they're going to learn more banking activity. And when the age is appropriate, I think it's about 13, 14, somewhere in that range, I forget. You have your children, you'd have to be a co-signer on with them, but open their checking accounts and allow them to put their allowances in there, and again, any monies. And then what you can do at that point, especially if they have like regular money coming in, if it's regular allowance or regular paper route or regular yard cutting or something like that, have that money automatically transferred over. Let's say if every Friday they do 2 yards and they've got, $100, and that's going into the bank. If 75 is going in, automatically Saturday morning, 25 is going out over to savings. And you work with those numbers as they apply to you, but just get them into the habit of saving, because one of the things we encounter as the melanated community is opportunities come along. We're not always aware of the opportunities. And let's say if someone shares a great opportunity with you, whether it's an investment, whether it's real estate, whatever the opportunity may be, we don't have our ducks in a row to take advantage of the opportunity. So what this does is this also prepares your child so that they're in the habit of doing it. If an opportunity comes along, they can take advantage. And it gets someone that in that mindset a whole lot sooner. You don't want to wait until they're 18, 19 and used to spending all their money, never saving, to try to teach them to save. No, teach them while they're young. They learn everything else while they're young. Teach them the finances while they're young. One other reason why it's good for them to have their own accounts is because we won't always be banking with the cartels. At some point, we will continue to grow and have more of our own banks. And so you don't know if your child is going to be in the finance industry. And so you definitely want them to have a strong handle on financial management, because they could very well be the next melanated bank owner. So, but they need to be prepared to do that. They need to have had some financial introduction at an early age, responsible financial handling, and that also builds the pattern of good financial management, because we know if they want to go to college, that's going to have to come into play, possibly for student loans or private loans, whatever the case may be, when it comes time to purchase a vehicle later on. Having shown that they have a savings account, they've had it for this amount of time, they've got a checking account as soon as it was age appropriate, and they've managed that well, those things will impact and help them to be able to make those first major purchases at a much more reasonable interest rate. And remember, that's the kicker, the interest rate. The higher the interest rate, the more overall cost you're going to pay for whatever your loan product is. So you want them to be in position to have the lowest interest rates possible so that they can maximize their dollar and use those funds towards something else. Just know that banking and finance is not taught in school. Some schools actually teach their students that, but as a general rule, it's not taught in school. They have to learn it, and parents, they've got to learn it from you. What's the best way to learn? Immerse them in it. Allow them to watch you go through the bills each month. Allow them to watch you make transfers between accounts, etc. Allow them to watch you. Or if they're not watching you, at least have some discussion about it. Oh, well, I've got to sit down and do bills today. Oh, that's right, I just got this $500 bonus. I need to make sure I put it in, and I need to make sure I transfer over to savings. Keep putting it out there so that they're familiar with, they're remembering that these are things that should be done. But when they get to the point of a checking account, they will learn to spend off of their debit card what they have. Because debit cards these days, you have those things set up to where if there's no money in there, it's not going to overdraft. So if they run out of funds, they're out of funds. That also eliminates their need for cash, because, kids can be irresponsible, especially if they go away to school. I had one daughter, they were getting ready for like senior dues and all that kind of stuff in high school, and she'd taken her money in because they don't accept checks and we couldn't pay online. You had to bring money, cash money. I think that they didn't even want money orders at the time. You had to bring cash money into the school. So she brought the money in, and several kids, it was the timing that several kids were bringing money in, and kids were running around going through each other's stuff, and she was one of those that got hit, and she lost her $300 and something and it was for her senior dues, her prom price, tickets, or whatever it was, and it was like several things built into that one price. And go figure, the school didn't even give her an extension or waive, a portion of the cost for anything. Nope, she had to repay, and that was her money that she'd been saving for. She had to turn around and, come up with those funds again. So, and in this particular case, the school, would not accept plastic. But in other situations, that eliminates the need for the kids to carry cash. One thing I did was I added Cash App to my kids' phones, because we're always going places, or they would be going places, and their friends would say, well, can you lend me this, can you lend me that? And I don't have it, I'll give it back to you later, type of thing. And so because my kids had bank accounts early on and they had their money in the account, they had cards to swipe from. And, everyone doesn't realize that those cards, that's not an endless supply of money. So when I added Cash App to their phones, and I taught them, if your friend wants you to, buy them $5 worth of something, and they say, oh, it's at home, I'll give it to you when I get it home, or I've got to go to the ATM and get it. Oh, no problem. Pull out your phone, pull up Cash App, let them put in their information, have the money transferred. You've got confirmation on your phone, and so everybody's hunky-dory. Now that my kids are driving, one of the things that we encountered when they first started driving was, their friends are always wanting to jump in the car. Hey, can you run me here? Can you run me there? And I had to remind them, hey, well, this gas costs money. There's wear and tear on the tires, on the engine. the more you're running it, the sooner you have to get the oil changed and all the other servicing. So are your friends contributing? Well, yeah, they're going to give it back to me. Nope. So our rule of thumb became, if they want you to take them somewhere, they would pay Uber, they would pay a taxi, they would pay anybody else. So they need to pull out their card and swipe it, let it go to your Cash App. If it's $2, if it's $5, $10, whatever it is, swipe those cards and get your money right then and there on the spot. So, but with Cash App, obviously it has to go to a bank account somewhere. So, and I think there are a couple other apps very similar to that. But so that's definitely a reason why you want to have bank accounts and stuff for your children. And yeah, like I said, when the kids began working and earning more consistent money, we had a set amount that they had to automatically put in the bank. So once they're at a point where they're having checking accounts and savings accounts, if the money they got, let's say for Christmas, was $100, okay, well, a certain amount had to go into savings, a certain amount had to go into checking, and the rest of it is cash. You go to the store, you blow it however you want. As they learned to manage cash well, we said, okay, you don't have to keep the cash. You can split it between checking and savings, but it's got to go in there. And then, again, obviously, once they actually started working their little summer jobs and fast food or wherever it is they're working, and they had a consistent paycheck coming in, we set up direct deposit. So the paycheck is direct deposited. You spend your money off a debit card, and with the direct deposit, every Friday, every Saturday morning, money was automatically transferred. We set it up so that the check comes in on Friday, it's posted by midnight. Saturday morning, it goes right on out. So they see it, but they don't see it. It's not even there long enough, really, for them to be able to spend it. But because we'd already started this savings process soon enough, it didn't really bother them so much. Now, keep in mind, when you go to open your children's accounts, they're going to need to have some sort of government ID, whether it's a state ID or passport or whatever the case may be. That's not all banks, but a lot of the banks are starting to mandate that the kids have government ID. Usually, their school ID and, maybe the social and a couple other supplemental IDs are sufficient. But banks are starting to require that the children have those IDs. So just keep in mind that you may have to take your child to DPS, get their mugshot, or not mugshot, but get their picture put into public safety records, get their fingerprints put into public safety records, and in order to do if it's a driver's license, they'll have to do the eye exam, which is electronic, it's biometric info that's being obtained. That's my personal opinion. But you could also try like the passport or passport card that does not require the fingerprints and the eyes, but and actually it supersedes the state IDs because that's federal ID. And the passport and the passport card are two different forms of ID. And we ran into that when my children were opening their checking accounts. That particular bank kind of pushed us for ID and had to go to their corporate website and show them it's not required. But the local branch had insisted they had to have it, the state ID. And at that point, I wasn't ready at 13 to take my children to DPS and have them fingerprinted. My thinking was, I don't even want to introduce them to public safety in that capacity. And no, their fingerprints and their picture do not need to be in public safety's databases. I wasn't comfortable with it. So, and those are decisions that you as a parent have to make on your own. But either way, you definitely want to get your children their own bank accounts so that they can start learning banking, financial management. They can start building banking history. And as soon as they're age appropriate, the other thing I did was I got a second visa, and I think some of the banks have some way of doing this, like a second card where you can set a cap of how much can be spent. but I got another Visa card just specifically, and I requested a certain dollar amount limit and that it don't go over that limit under any circumstances. And so the children received a Visa card. It's in my name. They were authorized users. So that began to build their credit, and it taught them to learn to handle actual credit, not just money in the bank, but actual credit. And so when they wanted to purchase stuff, they'd say, well, I can use the card. And I said, that's fine, you can use the card, but remember, you have to pay that back. And so when the bill come in, don't forget to pay your card. And I taught them how to pay their cards. So, that's building credit, and it's building financial responsibility yet again, so that when the time comes for them to purchase their first new vehicle or their first home or whatever the case may be, we've got a record that's being built. Too many times, people in the melanated community do not do that. I mean, there are adults that still don't bank, but the young kids especially. And then when it comes time to start out life and they need to get an apartment, or they want to get their own Visa card, or purchase a car, whatever it is, they have no financial history at all to draw from. So keep those things in mind. Go ahead and get ready, start saving. Start saving for your children as soon as they're born if you can. As soon as you get that Social Security number, start it. But if you haven't started it, go ahead and start wherever you are today. Just get started. Get your children into the habit of saving. And that's also going to work with the concept of deferred gratification. Somehow in the U.S. today, or in the world, we've gotten into, we got to have what we want. We got to have it now. I think our children definitely need to get back to learning to defer gratification on some things. And I think banking is one way to help them to know that. You don't have to spend the money just because it's there. You don't have to buy this just because you have the cash in hand. No. Put some to the side because you need to live for the next, 5, 6, 7 days. Well, not really live, but, you have your little expenses, whether it's lunch or whether it's lipstick or whatever it is, for these next 7 days. So learn to budget your money. So that being the case, let me know what you think. If you have any other ideas regarding finances for children, I'd love to hear them. Your comments, like and share, subscribe so that you can get, if you like this content, you can get notifications when I do upload additional videos. So that being the case, as I always say, continue to work your puzzle pieces one piece at a time, because our ultimate goal before we close our eyes for the last time is to have our puzzles completely finished. That being the case, you take care and you be blessed.